Welcome to day 9 of the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors, Admiral Markets. As always, gives me great pleasure to introduce Mr. Darren Sinden, market commentator for Admiral Markets. Darren, very good afternoon to you.
Nick.
How the devil are you, sir?
Very well, sir.
Well, we've got the Federal Reserve out the way, if that's the right terminology.
Yes, obviously, much anticipated that meeting, but in the end, something of a damp squib, I think, in truth. And if you read into the statement, my own personal view is that they're trying to please everybody, trying to keep the doves happy and the hawks at the same time. My own personal view, rates stay lower for longer. They'll try and react to the data, but to my mind, I don't think there'll be anything that will force them to do anything ahead of September. And I personally don't think we'll see a rate rise before December, if not 2016. So.
Okay, thank you very much for that. You sound as if you're on your soapbox, Darren. Okay, if you're watching for the first time, if you want to come on the show, if you've got any ideas for us, if there's anything you want covered, we're all ears, aren't we?
Yeah, we're always open to suggestions and feedback. We'd love to hear what you think.
Perfect. Okay, so let's go to the first slide. Today we're going to start with the data released over the European session. Okay. What's happened in Europe this morning, Darren?
Okay, well, if I may, first of all, I will take a little stop off in Asia because the Fed wasn't the only central bank that was meeting yesterday. We also saw the meeting at the Bank of Japan. No change there in rates, no additional QE. However, they have cut both their inflation and GDP forecasts further. I wonder what they're doing in Japan. I think there's a certain amount of denial, really. Massive QE programs not producing the results. They seem to think that they will get there in the end, but the data tells you a different story, so keep a close eye on that. Having said that, the yen probably strengthened slightly, which again goes against the grain. And then we into Europe, the European session proper. We had quite a bit of data today from Europe, but I picked out 3 items which caught my eye. German retail sales falling month on month by 2.3%. Bumper month, it must be said, in February. Year on year, they remain up 3.5%. So a sort of two-way pull on German retail sales. But if you look at a long-term chart of this data point, it's very, very seasonal. So I think you've got to take several months into account.
Understood.
Before you make a decision there. What is unequivocally positive, though, is the German unemployment number for April, 6.5%. That was down by 0.3% from March, and that is now at a 24-year low. So the German economy certainly appears to be firing on all cylinders as far as employment's concerned. And then a country that's done considerably less well than Germany over the last 5 to 6 years is Spain. However, there was a glimmer of comfort there. Their GDP for Q1 2015 grew by 0.9%, which was above the 0.8% forecast. Still, obviously, a lot of work to do, but it's a positive number, and it's a better number than analysts were expecting. And there's elections coming up in Spain as well, so that will probably have been a boost for the incumbent government, as it were, ahead of those elections. Yeah.
Okay. So let's now move on to the FTSE 100 movers and shakers. What's moving in the FTSE this morning?
Royal Mail Group hasn't had much to shout about recently. It's been under a great deal of pressure. However, it's up 5% today as the Dutch rival, effectively the Dutch Post Office, has ended talks about expanding into the UK. So potentially significant competitors not coming now to further perhaps compress Royal Mail's margins, and the market likes that story. As I say, they're up 5%, and who's to say they won't move higher throughout the rest of the day. Also moving upwards after a recent tough time is AB Foods, up 2.6%, and be aware that these people own both Primark and British Sugar, so a real mix of businesses there. Berenberg Bank, which is Germany's oldest bank, has got a buy note out on them today, and the market likes what it hears there, and they're up 2.6%. Moving on to Weir Group, which we touched on yesterday, they are up 2.3%, and there's continued positivity after that trading update from Weir yesterday. Once again, the market buying into that story and getting right behind Weir, who have also had their problems in the last 6 months. And in terms of things moving lower, lots of stocks down on the day, but many of these, things like ITV, Centrica, Travis Perkins and Reed Elsevier are all lower, but they're all trading
without the dividend.
Exactly, so that's knocked off the share price. So though they look like they're down, they're down for a very sensible reason.
Understood. Okay, let's now take a look at the next slide, M&A rumours and movers.
Okay, well, there's a very interesting story in the market today. It actually leaked out last night. Salesforce, ticker CRM, which is exactly that, customer resource management software, well, the biggest player in the space. They moved up 12% between yesterday's session and pre-market trade today on a story that the company is said to have engaged advisors in preparation for a takeover approach. Now, whether that means they've had an approach already or a tentative testing of the water, they haven't said, but that's the sort of the way the market's reading it. A market cap currently of $47 billion. Potential suitors, though, are much bigger capitalised. Names like Microsoft, Oracle, SAP of Germany, and possibly IBM are seen as likely suitors. If a deal was done or a bid was forthcoming, it would be one of the largest software deals ever. And just to give you an idea of how the market took to that story today, the stock traded 6 times its average daily volume, so it traded just under 28 million shares, when it would normally do about 4.5 million. And to put the sort of current share price in context, the stock's up 50% over the last
12 months.
So one certainly to keep a close eye on.
Understood. Okay, let's take a look at the next slide. US data points to keep an eye on.
Okay, another fairly full day in the calendar in the US as we had yesterday. Weekly jobless claims, first of all. Obviously, you know, this number takes on a bit more significance ahead of a non-farm payroll number. So we're looking for a gain, or a 288k reading versus a 295,000 for last week, so a slight dip in jobless claims. A figure that goes hand in hand with that, personal income numbers, and this is for March. We're looking for a small gain there of plus 0.2%. Last month's read was slightly better than that at 0.4, so one to watch closely as well. And then another one of the survey data reports on the state of the US economy, Chicago PMI for April. Now remember, PMI numbers show expansion above 50 and contraction below 50. The forecast is for a reading of exactly 50 against a very disappointing 46.3 last time out. But bear in mind, of course, that Chicago was one of those cities that was very badly affected by the adverse weather conditions in the earlier part of the year, and so, you know, we shouldn't read too much into the prior number, but would look for a bounce back as the weather improves in the April number.
Understood. Okay, let's look at US pre-market movers and levels.
Okay, well, I picked out just a couple of names again today in the pre-market session. Ferrocorp, which is a manufacturer of specialist coatings and pigments, they're up by nearly 8%. And it's the simple reason, the best reason to be going better, an earnings beat.
And raises guidance. 4 beautiful words.
They love to see guidance raised in the States, and they always react positively to that. So as I say, they're up 7.98%. And then Flextronics is a logistics company. They basically take electrical items and present them nicely in boxes and plastic containers for the original equipment manufacturers that they service. However, they went in exactly the opposite direction to Ferrocorp. They're down 4.8%, weak sales, weak revenues, and lowered guidance for the coming quarter. And so I suspect that you could see those get pushed down even further. In terms of levels to watch today, the S&P 2094 and 2125 are your levels. In the Dow, look on the downside at 17,922 and 18,133 for an upside level. The euro dollar, look where we are today, 110.75 is a downside.
112.50.
112.50. Who would have thought
the crowd's
that?
Wrong again.
Yeah, who would have thought that a few weeks ago? Aussie dollar retraced a little bit, so 78.54 on the downside and 80.25 to your upside. Dollar yen again a little bit weaker, or at least a little bit lower, 118.50 on the downside, 119.40 stays into the upside target. And in cable again, very impressive strength from sterling. 153.43 is the downside target, and 154.97 to the upside. So it could be a big figure change there in the offing as well.
Understood. So just going into the end of the week, markets relatively calm, would you say?
I think they are. Obviously, all eyes will be on the payrolls number tomorrow, but
is it tomorrow? I think it's actually next Friday.
Oh, next Friday. My apologies. Sorry. So obviously, all eyes towards that number, the big data point in the US calendar. But yes, it's a long weekend here in the UK. I think people have people who are relatively flat ahead of the Fed, probably not too much incentive to get involved ahead of the long weekend here. There may be a bit more activity in the US this afternoon. We should have to wait and see.
Okay, and we might want to tell the viewers that we're actually not going to do a broadcast next Tuesday. So Tip TV's basically going to have a long weekend.
We'll be back on this slot on Wednesday next week.
Correct, but we'll obviously do a segment tomorrow. Okay, that wraps up the Wall Street crossover show. Thank you very much to Darren Sinden, market commentator for Admiral Markets, and indeed our sponsors. We'll be back same time, 1 p.m. tomorrow. Thank you.